if a company has performed well, we have to see if it's from the operations, we say, can it be repeated? Is it sustainable or is it a one-off? Like I make a forex income just because USD has changed 100,000. It's not likely to repeat, so it's a one-off. So you have to make judgments, yeah? Okay, lenders have to make judgment. Okay. Now this is important for you to know. There's a cash flow statement. It shows you sources and application of fund. Where does the application of fund is we pay salary, we buy things, cost of goods sold. Sources is when we sell things, we collect cash, or there's a promise to pay a few months later when the cash comes in, okay? So sources is revenue, and sometimes we increase stock, we use it. Sometimes people pay us money, creditors, okay? And debtors also pay us. Creditors, we hutang people lah. We make use of other people's money, but at the end, we still have to pay. Why is profitability not equal to liquidity? It's because of accrual accounting. Remember, like just now, the nasi lemak, I may have made, say, 100,000 in the month of October, okay? Some of these are for parties, for events, so they may pay me only in December. So the cash flow for November doesn't show all the same as the revenue I have done, okay? So accrual accounting, remember, it is used in income and expenses, in the profit and loss, okay? It is meaningful for us to look at the cash flow. CF here means cash flow. BS, balance sheet, P&L, profit and loss. Sorry, I off my phone first. Notes to the account. There are 9 notes to the account. We will go through one by one, so you can use this page as a mind map. You can write some notes, yeah, over here. Okay, significant accounting policies. What are those significant things? We'll tell you. Breakdown, fixed assets, all this one by one. You can write down. These are very valuable, especially for lenders. We say the devil is in the details. It is where the notes that they write. Okay, so please, if you are doing lending, look at it. Yeah, for your work purposes. In the exam, you must know what is all this. Okay. Number 1, I ask you, who decides on accounting policy? Is it the shareholders? A? Is it the directors? B or C, the auditor? Can anybody tell me? On your mic and just tell me, make a guess. It's one of the exam questions.
Director.
Yeah, correct. Directors, yeah. So they decide on the accounting policies. Okay? So, what are those? You look at basis of accounting, we say is accrual, depreciation, stock valuation. We follow the Malaysian accounting standards, yeah? Because now it has changed, okay? Income recognition, depending on the nature of business, whether you are a manufacturer, whether you are a construction company, it's all different, yeah? Recognition method. Breakdown of fixed assets. Fixed assets will tell you whether the assets owned by the company is in line with the nature of business or not. Okay? If you are in manufacturing of steel, you do expect some big machinery. If you are in trading of steel materials, you have stocks, but you don't have the machinery to produce. So you won't expect to see plant and machinery so much. This whole building, all that, yeah, you will see a lot of stocks. Okay? And then you look at this fixed asset, you see whether there's any reserves, especially land. Okay? Machinery, you would expect it not to have hidden reserves, but to be depreciated in line with the economic lifespan of the machinery. And then you look at whether the Some borrowers, they may outsource part of the production process, so they have less fixed assets. So when you want to compare apple with apple, let's say in your bank, you have a few companies doing the same business. Some have outsourced, some have not. So their ratios will be slightly different. So you take this into consideration, okay, when you are comparing the accounts. We will tell you later what are the ratios. In the exam, they won't ask you so much of this, but just remember, if they have outsourced, then they have less fixed assets. Okay, this next notes to the account, banking facilities maturity profile and what collateral they have given to the banks will be shown inside the notes to the account. It is very important for bankers to know. Why? Number one, it will tell you whether you are pari passu or not. Yesterday we learned, right, the principle of pari passu lending. Yeah, this will tell you. You will see, legal mortgage given away to another bank. Well, then you look at the secrets. You will of course ask the borrower to give you a list of their banking facilities, right? Then you match it. Then you know whether you're pari passu or not. Okay? Then whether they have negative pledge. Very important is the maturity profile of the loans. You will see how much of the term loan is due within the 12 months, the next year, and all that. If you see that they have a loans due within the following year or the 24 months, then you ask yourself, can they repay or are they going to have refinancing? In SME, they may borrow again from you if they are buying new assets, or they can just pay you. In bigger companies, sometimes they issue bonds. Remember in CCR 1, we talk about capital markets, issuing bonds, or even issuing new shares, preference shares. So you will have to ask yourself the maturity profile. It is meant to be used for that. Give an indication whether they can meet the future obligations. This is a very important topic, yeah? Subsequent events. What does it mean, subsequent events? First, you must understand accounting period. Let's say in Malaysia, most of the companies, their accounting period ends on 31st December. Okay? Let's say they have entered into a sale and purchase agreement to buy a piece of land or an asset, okay, after the preparation of the financial position. That means after December. In January, February, they bought. And usually are given 3 months to go and get the loan, and it will be inside their books in 2026. The auditor will find that, it's important to let the stakeholders know that this company has entered into a large financial position, a material transaction. Then they will have to disclose it because it can affect their cash position, it can affect their borrowings, so gearing position. Okay, is what they have committed. Yeah. This is a significant event. Significant means materiality, yeah. You have to tie it back. So same thing, they have capital commitments, is another note to the account. During the year, they have spent so much, let's say 10 million, to buy a new line of machinery. Okay, but up to the year, maybe they may have finished paying it, they may not have. So it is a capital commitment large enough, material enough, they must put it, disclose it. Okay. Stock breakdown in the notes to the account, they will tell you what is raw materials, work in progress. You will usually find that for manufacturing company. Okay, these stocks will tell you what is the nature of business. Let's say if they have been in this corrugated box paper, you will find all this and you find that, yeah, it's in line with the nature of business. If suddenly you see a lot of rubber, during COVID time, a lot of company jump into the bandwagon of producing glove. Then you see something that is not in line with the previous years, you should question your borrower. Yeah. So basically, this stock breakdown is for us to look at whether it's in line with the nature of business, whether it reflects the operating cycle, and importantly is the stock obsolescence. Is there any stock that you think will not we call it stock lapuk? That means it's out of fashion. I have got companies last time that sell sports shoes, sports attire, and it goes out of fashion. Even the color will change. Okay? And by December, Christmas season, if they don't sell, they will know that next year they have to give a bit of discount, maybe 20%. By second half of the year, they will have to give up to 50% discount. If not, the rubber soles on the shoes will slowly wear off. So you look at it. Okay, another important note to the account is this: investment in associates and subsidiary. Okay, you see this entity P. Yesterday we learned, right, what is subsidiary, what is associate. Associate when you can have influence and you have ownership between 20 to 50%. If it's more than 50%, then you call it subsidiary. Okay, why is it important to know? Exam question. Because they will tell you related party, and then they will tell you whether there's any cash support given to your other subsidiaries down, and whether cash leakages. Okay, let's say you have Petronas. Petronas in Malaysia, they go to Vietnam, they do a joint venture there with another company, but they take 51%. So they call it Petronas Vietnam. Do you think they call it subsidiary or associate?
Subsidiary.
Versus, let's say Petronas go to Indonesia, another joint venture. But this time in Indonesia, they team up with the Petronas, with the petroleum company in Indonesia. Our Petronas Malaysia only take 30%. So which one? They call it Petronas Indonesia, 30%. Which one will be associate? Which one will be a subsidiary? Can anyone tell me?
Vietnam
Petronas?
subsidiary.
Vietnam is what?
Subsidiary.
Petronas?
Subsidiary.
Petronas Indonesia?
Associate.
Yeah. So if you look at Petronas account, they would give you a list of all these subsidiaries, yeah, the name, percentage, ownership, what is it used for? The investment is to cari gali. The other one is just to trade, for trading purposes, it will tell you, okay? Then you, as a lender, you look at it. Is it in line with the company's strategy and synergy? Or are they closing down the foreign companies? I have got last time group of companies, they want to pull out from Cambodia. They want to pull out from Myanmar before political instability step in. So you can see in the notes to the account, they will say cease. Then you ask them why, you discuss with them, and they will tell you their reasons. Or suddenly you find a few more in, say, Middle East, then they tell you, it's part of our expansion plan. Okay, so in the exam question, they will, remember, they'll ask you subsidiary associates, what is the percentage? You must know, yeah? Because it ties in also with your CCR 2 yesterday. Okay, the next one is related parties. Of course, related parties, simple as we always think of just, are they in the same group? Are they subsidiaries? Are they associates? Or are they just investment? But here, it is more than that, because why? You are talking about shareholders and directors' name as well. Sometimes, let's say the Genting Group. You read about the Genting Group, right? The shareholders themselves have other businesses. They may supply things to the Genting Group, or YTL, or IOI, the directors themselves may have their own sendirian berhad that they sell to the listed company. So you ask yourself, is it on arm's length basis? Arm's length here means you see this arm's length is like normal, okay? Arm's length means good lah. It's just normal market price, okay? It is not as a special preferential price. That is what you want to see. But sometimes sendirian berhad may sell at a higher price to the listed company. So it is not arm's length, yeah? Why? Because they want the sendirian berhad to make more money, to make more profit, okay? So in the notes to the account, they will tell you whether it is trade-related or non-trade related kind of transaction, and then whether it is advances, okay? Trade-related, they will tell you, you have to look at it, whether is there any transfer pricing because of tax, yeah, or this is especially in the large group, you see, high tax country, low tax country. In your SME, maybe they may not have so many overseas subsidiaries, yeah, okay, but they will have some companies, directors own only. Then they have not your borrower. Then they have another sendirian berhad that is your borrower. So you have to look at it, arm's length or not. Then you may see some directors have taken out some money from your borrower to their own company. Why? They want to buy properties. So they say, we pinjam lah for 12 months, or we pinjam for 6 months. Okay, you don't want that to happen. It's capital leakage, yeah? You don't want them to take cash flow out, okay? So there is a lot of amount owned to or by all these related companies. Important is you must ask yourself, is it arm's length, okay? So it's more than just subsidiary associates. You look at it, whether there's common shareholder, common directors here. Can Okay, contingent liabilities are very important. What is the meaning of contingent liabilities? The word contingent, what does it mean? Can anybody tell me what is the meaning of contingent? Contingent means is depending on. The simple English is depending on. It means it has not happened yet. If it happens like this, then something else will happen. Well, the simple one is guarantee. We have a borrower. Let's say just now they'll show you all this. NTTP Petronas may have given a guarantee to Petronas Vietnam. Okay, they may have given a proportionate guarantee in 30% in Indonesia. If those companies cannot pay, then Petronas have to step in. So right now they don't have to come out with cash. It's contingent. If they cannot pay, only we have to rescue them and come in money. So it's called contingent. So as of the financial position date, it has not crystallized. Okay, but in future date, it may become a liability. It may crystallize, then they have to come in money. So these are called contingent liabilities. Another example is suits, legal suits. People may sue our borrower. Our borrower may win or lose, but it's important enough to be disclosed. Then sometimes they will tell you, our lawyers think that there's this 1 million suit we are facing, but we have good defense grounds, so we don't need to make any provision. Or after fighting, our company may have lost the suit, but they are on the appeal. So they say, we are now on the appeal, 50% chance we may win. So they may provide 50%. Okay? So they may have to make some provision for it, arising from a contingent liability. So this is a exam question. Sometimes they ask you, what are contingent liabilities? Example A is a guarantee. B, entering to buy land. C, entering to buy machinery. So A is a contingent liability lah. Okay? And sometimes they will tell you contingent liability is they have entered into forex. You have companies that take forex facility from you, right? They think that, let's say now USD may go up. Before it goes up, we better book with RHB, 10 million USD. And they happen to book on the 29th of December. Forward, 3 months. So this commitment they have entered into forex exchange, they have not collected or they have not taken yet. So you call forex forward. So it is important enough to be disclosed inside the notes to the accounts to say that they have this. Okay? Or they have derivatives, the options. Some companies have entered into derivatives which can make money or lose money for the company. We don't know yet because we have to look at the market. So these are called financial obligations and unrealized. Unrealized same lah, future date, okay? Depending on. So these are the contingent liabilities in the notes to the account. Okay. Non-financial information. Okay. Out of so many things here, we can tell you auditor's report is the one that will come out in the exam topic. Sure come out one, mandatory it will come out. Okay, so out of all this, we will focus more on this auditor's report. Okay, you have director's report, auditor's report. These are for all the companies, Sendirian Berhad, okay? Then for Berhad, they have to add in 1, 2, 3, 4, 2 more. They have to add in the chairman's report and activities report. Okay, if it is listed on a stock exchange. This one I'll go just pass through. It won't come out in the exam, yeah? Your chairman will tell you what major events have taken place, how they look at the risks, opportunities, prospect, and all that. Okay? Director's report. This one is important because exam question is this. Attestation by directors, which means they will tell you that we swear that it's true. This is true and fair. In recent years, there have been issues or concerns in listed. Usually, you read about big companies lah. One is like Server Dynamic. They will have to say it is true, and then the auditors will have to audit the account, but later it may turn out to be not true. Remember disclosure we learned earlier? CCDM disclosure, right? What they disclose must be true. So exam topic is what needs to be attested inside here? Chairman's report, no. Okay, it's not that. Activities report, no. It's not attested, but is this one? Yes. It tell you the things, the usual thing is name of the directors, how much they own, especially for listed company, you want to know how much shareholdings the directors have, okay, what they have acquired, and have they issued new shares, debentures, have they redeemed shares, okay? This one is important. Is there any doubtful debts that they need provision? Are there any assets that they think the value has gone down? Okay, diminution. I tell you very funny, this CCR exam, sometimes they test you on English words as well, like superfluous, all these words, numerator, denominator. So you look at this, have the value of the assets shrink, okay? This debenture is like a loan, investors give them money in return for financing, okay? Debentures, not the collateral debentures that we talk about, that we take, lenders like to take debenture, that's collateral, that's security. This word debenture here means that securities. Then they will tell you appointment of directors. You have to look at it. Has there been a change in director? If there's a change, then you ask yourself, why do they change? Is it because the previous auditors don't agree with them, then they change it? You have to know. Attestation, again, this is required, important, required by law. Extraordinary items has happened or not during the year and after financial year. After that, there's a significant event, okay? And then the other items here. Inside the Companies Act, it provides automatic reappointment of an auditor for private company. Okay, Sendirian Berhad. If it's Berhad, they have to get the AGM to endorse their reappointment. Okay? Activities report will just tell you the bread and butter business of the company. So for you to know whether they have gone diversified or not. If they have diversified, you have to ask them why. Do they really see it a good opportunity, a sustainable opportunity? Do you want to see your borrowers say, yeah, we have jumped into the bandwagon. We are now into cryptocurrency. What does that tell you? Are they taking risk in line with their business, or are they taking too much risk?
Too much
from
risk.
trading.
Too much risk.
Too much
Too
risk.
much risk.
Your antenna should come out, okay? You should come out whether what they diversify into. If they tell you, I'm selling food and beverage okay, coffee. Then next thing is, we diversify, we have another small company that produces buns. Now we have some pastries, buns, we buy from outside, but we don't know, we want to test water, so we start selling some croissant. One, maybe you can accept it, yeah? But suddenly, if they tell you we go into Chinese restaurant, then you ask them, who's the chef? Is it related to you or not? And all that. You have to ask, okay? All this. Number one is sustainable or not, whether they have the competent management to run it. And where do they go to? If they tell you, I have got real life companies that they deal with gold. They sell gold to China. During COVID, they say, oh, we want to diversify. We don't want to depend on China market alone. So we sell to Australia and India. Or I have got gold companies to say that we deal with Middle East. And these people who sell jewelry, they actually bring pieces of jewelry and then they say we cannot fly there. But China allow us to fly in. So now from Middle East, we are diversifying into China. Geographical location has increased. So you must talk to them and understand, their reasons for diversifying. You must make an assessment whether you think it's a good diversification or not, whether it's a good expansion or not. Auditors report, 5-star, okay, 5-star, exam topic, it will come out here. What is the number one that will ask you is, auditors report got how many parts? 2 parts, scope paragraph and opinion paragraph, okay? That is one question already. Under the scope, they will tell you what scope that they cover okay? This one, I have seen some companies, some auditors who say that, okay, I cover the major countries' accounts. Let's say they diversify into Vietnam, India. I look at the accounts, also can, okay? But the scope may say, oh, but we cannot fly to, not cost effective to fly to small countries, Papua New Guinea or India. So those accounts are audited by the auditors there. We rely on their auditors. So they will tell you some scope, And then another question that will come out, definitely will come out, is the opinion. Generally, all the accounting reports is to tell us this has been done and disclosed in a manner that is true and fair. You look at the word true and fair, okay? If everything is done in accordance with the normal accounting standards and all that, it's a clean report. We call it unqualified. Qualified means subject to, except for.
Hey.
It is, these accounts are,
Wow.
excuse me, let me drink some water. The word qualification here means it is good except for certain things. It is good subject to. Okay? It doesn't mean the Malay word layak. Okay? Sometimes we say, oh, he's a qualified doctor, oh, he's a qualified accountant. Here, qualification has a different meaning, and it connotes if it's qualified, it's no good. Okay? So they will tell you, auditors got a few types of opinion. So generally, is qualified or unqualified. You just know that unqualified is the good one. Got nothing else to say, you just say true and fair. Qualified is not good, subject to, except for. Then there's another type, two more types of qualification, adverse opinion, disclaimer, which I will go through with you later. Okay? So remember, this is a 5-star exam topic scope. What are the two paragraphs? The scope and opinion, and then they'll ask you opinion. Okay, next one here. The best one you see is in green. An unqualified opinion, or just we call it clean financial statements. The statements are presented in line with the accounting principles. Nothing wrong. It can be loss-making, never mind, but loss-making, but is in line. Okay? Qualified opinion is, it is only true and fair, but we have some reservations. Okay? These two are quite common for us as lenders to see. Sometimes they may even have, they say, going concern. These accounts are prepared, However, they will need shareholders' continuous financial support for it to be treated as a going concern. And the directors and the shareholders have given their undertaking. They have actually signed undertaking to the auditors to say they'll continue to put in money. Then only the auditors will issue the account. Okay? Qualification. A disclaimer is they try to audit, but they cannot audit certain things, and they are not sure that these accounts are true and fair or not. There are too much uncertainties. So they call it disclaimer. Okay? Like playing Tai Chi lah. Don't know true or not, we just disclaimer. Okay? This cannot be resolved yet. I cannot express an opinion, yes or no. Okay. The not so good or the worst one is adverse opinion, where they say these statements are not presented in a way that gives you a true and fair picture. So this is not good at all. They will tell you this outright, like, don't believe this. Okay? So these two, adverse opinion, disclaimer, you seldom see it. But sometimes you see it after the fact, okay? Like 1MDB lah. Sometimes you see it's unqualified, blah, blah, blah. Then later they say, oh, we disclaim, it has happened before. Don't rely on it. Don't rely on our opinion. Okay? So some banks, they don't want to lend to customers when you have seen adverse opinion or disclaimer. If you have lent already, you may want to exit. Okay? You look at that. Okay, thank you, Paul. It says cannot express opinion by auditor is disclaimer. Don't rely, yeah. If you just Google the history of 1MDB, you can see the auditors playing Tai Chi lah. Okay. So this little slide here, please, is an exam topic. You highlight 5-star. You must know each and every one of these, yeah? A question will come up, and this is what we call low-hanging fruit. No need calculation, you just read, okay? If I have time later, during lunch, I will pull out some auditor's report and let you see, okay? Auditor's opinion, this is when they say qualified is except for possible effects on where the results are, generally okay, true and fair. Adverse opinion is when they see this because of all this, is not true and fair. Do not present fairly or do not give a true and fair view. You see or not? It's like, hey, this is not true and fair. Okay. Now, when do auditors qualify a report? You must know these are the common reasons are in the exam they may give you A, B, C, D and all that. The most common one is they don't comply with approved accounting standards. Generally, we frown upon when they don't comply with accounting standards. I have seen customers where they are supposed to revalue their land, they don't want to. They want to create hidden reserves. Because it's a family-owned company, they don't want outside world to know how much the real land is. In Penang, there's a lot of rich families with old land, so they don't want, okay? So the auditors do qualify that. And then some value of the assets, sometimes it is not all the asset can be valued easily, If you are oil mill, and then they tell you, okay, I've got 10 tangki oil and the oil is so much, but some of the oil could have turned rancid. The acidity is not so good. So the value of that tangki of oil would have come down and there is some uncertainty, okay? So they will have the estimate. If there's uncertainty, the auditors will have to qualify it, okay? Going concern is another common one. They say that the company has been losing money, now it has gone to negative net worth. On paper, it looks like it cannot tahan this company. Cannot tahan for maybe 2 more years or 1 more year, unless the shareholders come in to support. Okay? So this has to do with the ALAP principle, going concern principle. Okay, here. This one is also exam question. It says here, Companies Act 2016 says that you must prepare your financial statements in accordance with applicable accounting standards. Okay? And this accounting standards is MFRS. So, this one, can you put a 5-star here? Yeah, this one, In the event there is consistency between the Companies Act 2016 and the applicable accounting standard, that means the MFRS, the provisions of the accounting standards shall prevail. Shall prevail means override, supersede is higher. Okay? So in the exam question, they will ask you, there are conflicts between Companies Act 2016, or they will just tell you there's a conflict between the law and the accounting standards. Which shall prevail? A, the law. B, the accounting standards. So the correct answer is B, yeah? This is a favorite accounting exam topic. Okay, I'd like somebody, Woon, can you help to take the picture of the chat that Master Trainer Paul has written and you put it inside the WhatsApp chat? I think Paul has given us very, very good points there. So for everyone to remember. Yeah.
Hello. It's
Hi.
Pui Hua who mentioned it. I just type in to help you all remember. Give Pui
Yeah,
a big
yeah.
hand. Give Pui a
Okay.
big hand. Okay, good. Okay,
Okay.
carry on. Good. Pui Hua can take picture and post
You.
in. Right, you're right. Okay.
Let me go to the next one. I take off my annotation first.
Not to comply with accounting standard.
Okay. What do auditors do when they need to qualify the accounts or they see something that they are not so happy? It warrants a qualified opinion. Okay. So what they will do is this, they will go to the management and ask them, can you tell me why your accounts are prepared this way? Like why you don't follow the accounting standards? Why do you think it should not be qualified? They will actually give management a chance to explain. So that management will explain that. Okay? If the auditors are convinced, then fine, they buy the explanation by the they buy the explanation, so they won't do anything else. They will say, okay, it will be clean accounts. If the auditors are not convinced, they will ask the management to rectify. Oh, I think you have not done it this way. I think you should like revalue the assets and all that. If the management rectifies the issue quickly, then it's all good. It will be a clean opinion. If the management fails to rectify the situation to the satisfaction of the auditors, they say, yeah, but I think the rancid oil is not as bad as you think. It's only 1% rancid. So we provide a bit down. But then the auditors may think that it's 10% rancid, cannot sell already. Nobody will buy the oil from them. If the auditors are not satisfied, they will continue to qualify the account. Okay? So this is the process how you get to see the account finally whether it is qualified or unqualified. Okay. This one I will move on quickly. Further notes to the accounts, there are some principal activities. So as a lender, you go and visit them to confirm the activities. Even the auditors would go to the material one. Let's say I am in plantation. I plant the palm oil and all that. Suddenly I tell you I have expanded into a chicken farm and it's very big. Last year, palm oil 100% contribution. This year, chicken farm 20%. So as an auditor, they would want to make a physical visit. Okay? Just to bring to your mind, what are the principal activities of a company? It used to be in the MAA, Memorandums and Articles of Association. Right now, this MAA in the latest Company Act, they have changed it, is a constitution. Okay? So, in the recent exam, they will ask you what is a constitution, which companies have a constitution. So you also must know this word, constitution. Is like a charter, what the company can do, cannot do. In the old days, it's called MAA. Okay? There was an exam question 2 months ago on this word constitution. Detailed accounts, quick one is the accounts that they submit to CCM. The one that we usually see are not details. The company, the auditors actually have prepared also detailed accounts. So these are not required to be filed with the CCM, but if you want, you can ask for it. Okay, detailed accounts. And remember yesterday, Jay have also told you what companies did not have their accounts to be audited. Yeah, he has gone through with you. Private exam companies, threshold companies, threshold qualified companies. Detailed accounts here will tell you trading company is different from manufacturing company. am not sure here why my annotation doesn't go off. I'm just trying to make my annotation go off. I'll try to find my eraser later on and erase it out. Sorry. Okay. And a construction company or property company, if you look at the breakdown, just like just now we say stock breakdown, it should look different from, say, a manufacturing company or a data center company. Okay. Fundamentals of financial position. Financial position is a balance sheet, yeah? Let me just check the time. Okay. I think before I go in here, we will take another 10 minutes break, okay? And during the break, I'll try to erase off this annotation of mine. Thanks, yeah? You all can take a break now for 10 minutes.